The Weeknd, who is currently trying to raise $1 billion, which is backed by his streams.
It's literally like it's a $1 billion credit card. But also, where the hell are they getting these numbers from, bro? I went through this long journey down the rabbit hole. One of the things that they think of is called your net publisher share, and that how much money that you get after you pay everyone else who has rights to the music itself. Another one is we see something huge coming from there.
I agree. The internet is a very big place. There are people interested in so many things that are looking for the thing that have not found it. So your responsibility as a creator to make it.
It's another episode of Dude Dilly. Welcome back. I'm Carl.
I'm Jonathan.
Today we're covering music catalogs. There's been a lot of deals in the last few years. When we think about the music industry, we usually think about just label deals. And it's like this artist, they're in a 360 deal or they went independent. And typically when we hear about the money that artists make or the value of the artist, is usually like related to their ability to tour. And then obviously in the last few years, artists have been figuring out other ways to monetize their work, whether it's like through brand partnerships or through merch sales or other collaborations. But like this end of it is effectively the big money, right? We're talking about folks like Goldman Sachs, Blackstone. We're talking Harborview. We're talking really big financial firms who are stepping in and doing these deals. And the fact that that's happening in this space where there's a lot of artistry gives me just like something really excited to look forward to and to talk through today. So I guess we should talk through some of the deals that like have been really interesting, that have been giving people like real sticker shock, right? I guess I'd start with like the Justin Bieber $200 million buyout by Hypnosis in 2021, right? That I believe was like a huge stamp of like, yo, we do this now. Like, this is a thing. And there were a few deals before that, right? Obviously, it wasn't the first deal, but it was such a large number that I wouldn't be surprised if everybody in the industry kind of poked their heads around and said, yo, like, what's going on here? And how do I get a piece?
Yeah, I mean, I think Bieber's a hit maker. He's been a hit maker, and he's been a hit maker since he was around 14. So he's had, at the time of sale, a 20-year career almost of making music. So when you think about kind of the entry points of that deal, it's not just that he got the liquidity, it's what he paid for to get that liquidity. And so that deal, to our knowledge, was one in which he actually sold the rights to his catalog up until 2021. So anything from 2021 backward, he parted ways with.
So that's what? That's baby, oh.
Hits.
That's the like, yo, those are the classics.
That's the Purpose album, which went really crazy. Those are hits after hits after hits. And I thought that deal was interesting because he had recently canceled the tour that he was supposed to go on. And so if you think about the amount of money that goes into touring itself, could be another 2 or 3 episodes that we don't have time for. But those tour companies expect guarantees because it's essentially like they're essentially LPs in the artist for the tour. So you're talking about venues, you're talking about booking, you're talking about staff, and the idea is you put money in, ticket sales, you recoup. Yeah. So canceling that's money that has to get repaid, that's due. Then you have a situation where there are relationships with past management. So people also have things they can hold over you. And there just might need to be liquidity involved. In an artist, you got a lot of going on. You got a lot of expenses. You don't know how people are living. You can't count their pockets. So I think that deal for an artist that prolific, that globally well known, it was always going to make headlines. Justin Bieber, makes headlines being Justin Bieber. So something like this is big, but I also think an artist of that magnitude and stature, that's a generational, Justin Bieber's a generational kind of artist, to sell at that kind of clip and then to essentially be like, cool, now everything forward is like me. So we cleared the deal. I paid my debts. Now everything out after that, I'm making the music I want to make. I'm out of my deals. For all intents and purposes, I'm an independent artist in some capacity. And so I'm going to make what I want to make. And I think that that's why the conversation about ownership is multifaceted, because it's ownership of what, for how long, and for what purpose.
Yeah. And if you're an artist, you have to make that decision. You know what I mean? And you have to actually be able to stick with that. I think the beauty of it now is that because this kind of burgeoning industry exists now, you have a bunch of different options that you can spin through, right? Another deal that I took time to look through while we were researching this was the Hypnosis deal, which was in 2018, where they IPO'd with a bunch of different artists within their purchase catalog. And a big part of that purchase catalog was the Dreams Publishing, right? And they basically IPO'd that on the London Stock Exchange and raised $200 million on that IPO. And of course, like Hypnosis as a company has a long story, right? Like when they did that IPO at that time, they were just on their own as a fund doing their thing. And then eventually they ended up in a tumultuous situation between Blackstone and Concord, which they ended up being taken private. But these types of deals showed us that this market is a thing and it's really ripe. But especially during that time, one of the things that I kept asking was, where the hell are they getting these numbers from, bro? Right? Like, where are we getting $200 million for Justin Bieber's catalog? Like, where are we getting a $200 million IPO for The Dream and a bunch of other artists' publishing rights or for their recording rights? Like, where are we getting these numbers? And, I went through this long journey down the rabbit hole for how these different deals are valued, like how catalogs are valued, right? And so there's a bunch of different ways and a bunch of different metrics that they like to use. But one of the things that they think of is what is called your net publisher share or your net label share. And that share is effectively how much money that you get after you pay everyone else who has rights to the music itself. So when you think about it from an artist perspective, if you're an artist and you say, okay, great, I'm producing a song, I'm putting a song out, I sang on it at XYZ. If I wrote the song, then I don't have to worry about that part of the publishing because I wrote it and I don't have to pay anyone else. But let's say if there's a label and the label says we own 20% of the song, you have to pay them. If there's a producer, they have rights. If you didn't buy out those rights ahead of time, you have to pay that person. And basically they're using that information to determine what the value of your, what is the revenue that you're getting off of the actual music itself, right? Another one is your streaming share breakdowns. So the beauty of this entire process now, and I think part of the reason why we're actually seeing these types of deals is because we're actually able to project what the future revenue of these artists' music is going to be. We're in a world where we never really had that, because the ability for an artist to put their music out was really, based on, what label they were signed to and what types of distribution deals that they had with radio stations, right? But now, because of streaming and these numbers are coming out regularly and we know how much artists are streaming, we can also get an idea of what they'll stream in the future.
Private equity was investing so much money into catalogs because capital was cheap. In 2019, 2020, interest rates were very low, so borrowing capital was very easy.
Okay.
And the thing that's happened with streaming is that it's provided predictable insight into recurring revenue. So like I was saying earlier, it's very easy to predict what something can do and what it can generate, because there's now all of this historical data now going back to the early 2010s around what things have streamed, and it's very easy to figure out and calculate and quantify.
So they're also using that data to make a determination on what the value of your catalog is. They also have an interesting way for how they're determining what a catalog is. So typically, if you have an album, or if you have a set of songs that is 18 months or older, that's when they qualify it as catalog. Anything newer than that, that's not cataloged music, right? So as a result, you have this like year and a half cycle where you could start to make that determination on what the value of your music is going to be. Mm-hmm. But the interesting thing about this process is also that based on the type of artist you are and based on how long your music has existed, they actually apply a multiple to that. So they have these different multiple breakdowns, and the multiple breakdowns are it's like a super prime legacy breakdown. So if like you're a super prime legacy, that's the highest multiple you can have. And those are people like Bruce Springsteen, who've been making music since our parents were kids, right? Mm-hmm. But then you have like what they call a prime evergreen multiple, which usually is between 12 times and 8 times the value of your music, right? The net value of your music. And those are like your big artists. Those are your Jay-Z's, your Taylor Swift's, folks who have been giving us classics, but they still may be active, but also people who are recently non-active artists, but also still gave us classics. I think about like a person like Usher. They would probably fall within like the prime evergreen level of multiple when you think about his catalog. But then there's like mid-tier active artists, there's new catalogs, and there's emerging catalogs, right? So really at the end of the day, it's what kind of music are you putting out and how is it being cataloged and where do you fall within these multiples that's playing a role in determining what the value of your catalog is and what you can either sell or borrow money on based on what that catalog is.
Yeah, I think that so multiples on streaming is different because traditionally you're looking at assets that are hard with multiples. So you're looking at companies, you're looking at real estate, you're looking at private credit, things that you see in day-to-day life. Music is interesting because it's typically considered illiquid, meaning you can't actually get money out of it in the same way you could pull money out of a mortgage. And I think this is interesting if you think about an investor who's trying to think about navigating volatility in the public markets or in the current environment. What thing is non-correlated to active fluctuations every day? So music is actually an alternative investing class because it's not correlated to our typical market cycle. So it might affect an artist's ability to tour because people have less money to go see them, but that doesn't affect people's interest in listening. So that actually is interesting because the larger your catalog or the more active the catalog is, or if there's a cultural event that happens that can re-engineer a level of listening. You see this on TikTok where there's like these nostalgia trends where an artist will just chart randomly, no one knows, and then there was a trend that happened and people went to Spotify or Apple Music to listen to that artist because it was in a actual challenge. And so that person can chart for weeks because some 16-year-old had a challenge and now that artist has a second wind.
Yeah.
And so that's interesting because at any given point that asset can rise in value. And then there's all kinds of other levers you pull in music. There's sync deals to get in movies, commercials, video games. There's air rights. So what's playing in the mall, what's playing in Macy's, what's playing in Louis.
Mm-hmm.
There's obviously sort of worldwide distribution rights. So what happens when your music is played in a different actual location that you're not in? How do you recoup those rights? And so like if a firm owns the catalog, there's a bunch of different ways that that revenue can be increased actively and that revenue can be received passively, which is interesting for an investor because I don't have to think about the market, but I do need to think about culture. So I need to be adept at what's happening in culture in a different way than simply like watching my Bloomberg terminal go back and forth.
Yeah.
It's not the same, but there's a level of rigor to culture that I think is often overlooked. And it's just music. You can't make money off music. And it's like, that doesn't appear to be true if KKR, Apollo, and their friends are putting $500 million slugs into businesses that are trying to build entertainment platforms and go acquire catalogs for it.
Yeah, I also think what's really interesting about it and why people do need to kind of be tapped in culturally is because like the way the music is used today is so different than it was before, right? Like the thing we have to think about is that there's so much more media being created. There's so much money being put behind the new media that's being created. And like music typically is the background of media, right? So if you're an artist today and you have a catalog and there's a culture surrounded around the type of music that you make, like that's what these people need to kind of pay attention to. And in a real way, that's the way you and your team need to operate, right? There's a level of relevancy that you have to kind of keep up as an artist because that's actually directly tied to the value of your catalog. Where back in the day, you kind of did have this ability to disappear for a really long time and just do your thing. And maybe you wouldn't get played that much, right? While you disappeared. But only when you pop back out, then your streams would go up. Or when you pop back out, that's when people are deciding to listen to your old stuff. But today, this level of relevancy actually is directly tied to dollars. And I think that's the thing that many of these larger funds are seeing and seeing different ways that they can monetize that. We're talking about the funds, so I feel like we should kind of sit down and talk a little bit about who they are and what they're doing, right? And who they're backed by, so on and so forth.
Yeah, I agree. I think one fund that I have paid very close attention to is Harborview Equity Partners. Harborview Equity is started by a woman named Sharice Clark. She has had an incredible career and has a really clear focus on backing, I would say, artists that are both generational and have deep influence.
One of the things that we found, and I think you're seeing it deeply resonant today in culture, is that the deeper that you go, the more nuanced that you go, the more universal the story is, right? So think about things like Bad Bunny's most recent release being the number one streamed album globally, and it is highly specific. It is Spanish language, but not only is it Spanish language, it's Puerto Rican slang, so it's actually not really accessible to everybody who even speaks Spanish, but it is universally amazing. The plena, the drums in that album is a beautiful reflection of that specific culture, and then it also has this appeal to everyone in the world. So what we're looking at when we're looking at creatives, whether it's musicians, whether it's film companies or producers, whether it's things in the sports arena, we're always looking for things that really speak to their audience, that are deeply engaged with their audience. As an investor, my job is to make great returns for my investors, which tend to be pensioners, it tends to be high net worth individuals, and so I have to deliver a great return, but you can do that, we believe, very strongly and deeply, and have proven to do so by investing behind great audience, people who are really greatly engaged with their audience and who know and believe and respect their art.
So I think that's a very different thesis than sort of who's the biggest artist we could go buy out. A lot of recent transactions, but one that stuck out was they did a deal with Nelly. I think it was a year and a half ago, maybe. And Nelly's a generational artist, obviously a hit maker, but I think there's a level of vintage that they think about when they engage, and they're also, I think, very culture forward. So because they are sort of backed by a very large credit line, it allows them to think about themselves as a platform. And when we say platform, we mean a flat surface by which they can engage an entire industry. So they don't simply invest only in catalogs, although that's what we primarily hear from them. They recently did an investment, I believe, in a animation company. And so if you think about the power of bundling, if you think about having a catalog, if you think about having assets that are robust in media that intersect with music, and then you think about the means of cultural production like a studio. They also recently invested in Issa Rae and Hooray. And so thinking about these kind of partnerships, you think about the field of play and how all of those things are interconnected. So when we're talking about music, we're talking about where music goes and what powers music, and then what powers culture, or what new culture is created by. And so there's relationships that are capital, and that capital is used to think about what do we want to impact in the industry when there are artists who are looking for liquidity. People don't necessarily want to keep recording. You said something interesting too about this idea of being able to just disappear, come back out when you want to, which is honestly my life's dream. But a lot of, I think we talk about the exceptions to the rule and not the actual difficulty of the environment. So there are not many artists that are able to do what Kendrick does in between projects, or what J. Cole does, or what J. Electronica does, or dare I say Sade, right? Like, just to have that kind of gravitas where you hear even Cleo Sol, I think, is also in kind of that group where the way she releases, like there's just a decision that was made, and the things around that decision support it, right? Like Top Dog supports how Kendrick moves. Like, so the apparatus is supportive of that premier artist, and they get to set a new standard and dictate that. That is not the average experience. And I would argue that's what gives that artist an outsized catalog value, because they do not follow those rules, and they are not subject to those rules. because they've chosen to break them from the beginning. I think it's very hard when an artist is like, I'm good, but you have trained your supporters what to expect from you. So that's actually a different relationship now when you want to leave the public arena. And I think that's why this capital actually will become more and more present, because when you do want to leave the arena, there are capitalization machines that are like, we'd be happy to help facilitate that for a piece of your future earnings.
Right.
In whatever format you want.
How are you picking what has staying power?
Yeah, so it's a combination of a lot of things. And I think we've talked about this in the past. To me, because there is so much technology that allows us to see how our audiences are identifying who they want to spend time with, how they want to listen, what their listening behavior is. We really do not hold ourselves out as the purveyors of culture. We believe that the audience are purveyors of culture. And so what I mean by that is, we really are following audience, and we see audience in, a variety of different places where we are fans, and some places where we're emerging fans or new fans. And that's the most important to us, is really by identifying audience. And the reason why that dovetails back to exactly what we were talking about with respect to stability of cash flows is because you can basically find music and content that resonates with an audience, and that audience, to the extent that they listen, show up, and engage on a continuous basis, it's measurable, it's therefore investable, and you can see those cash flows and then have ability to forecast them into the future.
Because we talked about catalog sale. We've talked about Hypnosis actually bundling that and then taking it into the public markets. And there's a third example, which is The Weeknd, who is currently trying to raise $1 billion credit line, which is backed by his streams.
Yeah.
Which is distinct from actually, but before that, he actually was trying to get a valuation on his catalog to potentially actually partially sell it. And he was like, I actually don't want to do that. I would rather have the collateral be the value of my streams, which you have data for over the past 10 to 15 years of my music career. And if the value of it was already over $1 billion, then I should be able to get the credit secured to go do what I want to go do on the performance of my catalog.
Yeah.
Which I think is another way an artist of that stature can sort of move around thinking about their value in the ecosystem without giving up essentially the retirement plan for an artist like that, which is the royalty exchange of your music continuing to actually be profitable regardless of what you're doing.
Yeah, I think the beauty of The Weeknd's deal that he's trying to structure at this moment in time is that the way it's structured, it's not like, hey, here's a loan, go do your thing. It's instead like it's a $1 billion credit card, right? That he gets to draw down and refill and draw down and refill on over and over again, which creates this like extended lifeline for him and his artistry. But also, if he's able to do it successfully, and it's a deal I'm watching closely, it actually sets a new standard for like other artists in the space, because that level of flexibility is huge. Like the difference between what The Weeknd is trying to structure and what Justin Bieber's trying to structure is Justin Bieber sold the rights to his catalog completely, right? The Weeknd is like, I'm not selling you anything. I'm literally saying that these are going to be my numbers. And since these are going to be my numbers, I would like to have a credit card. It's no different than when you apply for a credit card and you say, this is my income. This is why I work. I would like to get a black card, please. I promise I'm going to pay it off every month. But instead of your job, The Weeknd is using his streams, right? And if successfully done, it's going to like really change the game for folks. You know, the very early deals, when I think about like the very early deals that we had in this space, like kind of like the the Michael Jackson Sony situation, or like, you know, a lot of artists buying their masters back because they got label advances. I'm sure that many musicians in the space are looking at how artists are moving now, and they're just like, yo, how, like, this is amazing that this is happening, you know? But in a real way, there's also, like, this is not only reserved to the largest artists. This is also, you know, there are also companies that are doing this with artists that are on the come up. I think about Beat Bread. I think about Amuse. I think about Horus. I think about Vibrate. These are companies that do that with smaller artists, and they're just using your DSP numbers, right? Like, hey, what are you getting back from the DSP since you're independent? And can we use these numbers to actually give you an advance on your music? And there was a company that you also brought up to me called STEM that does something very similar.
Yeah, STEM's idea is that in the same way we've been talking about sort of getting a line of credit, I would think about STEM like a short-term loan, but instead of you having to pay it out monthly, they engage your revenue that they believe you would make in the future. So instead of you sort of having to feel like they have it over you, there is a portion of the future revenue that they can track that you would make based on your historical numbers, that they're like, cool, we're going to give you this, and over time, that money will actually flow back. And then once you're done, you're good. And so you don't have to think about giving up all your ownership, which I think is kind of the boogeyman in the room, which is like, keep your ownership. Ownership matters. Ownership is everything. And I agree. And there are deals that if you understand the value of your catalog, and we talked about this earlier, it's a similar idea of a temporary LP in some respects, where the money that you might need to finance your own tour or build the home studio you want, or give yourself some floating room, can be made available, and the repayment terms are based on you actually being more sustainable, which is just a very different relationship to kind of capital than the traditional, like, we're just going to hold this over your head. You can't ever have your masters. And I think you got to be smart about it. But I found that to be interesting because you can go get 10 years of Spotify data. If you've been an artist for a while, that's a reliable forecast metric in some respects. We could argue about, you know, Spotify sort of being as big as it is, but that's different than the fact that there is data on you as an artist. And that due diligence is much cheaper.
Yeah.
Because you can use technology to do it.
They're not even pulling up people's credit scores. They're not even asking you for your credit score when they're doing these either.
So that actually, if you are a full-time musician, that's a very different sort of relationship because it's based on what you do and based on your relationship to your actual community, your fandom. And so again, while streaming does not pay equitably per listen, it is still used as a bandwidth decider on valuation. It's still a term in valuation the same way we'd look at, you know, cash flow over the past 12 months, right? A DCF metric. It's kind of like, while we can, again, like the argument about it needing to be more equitable is very different than the fact that it's still being used to value artists.
Right.
And to actually get people faster liquidity sometimes. And I think, you know, you got to be mindful of stuff like perpetual rights where it never comes back, or, you know, signing a deal where they take all revenue streams.
Or the rights reversions too, right? Because, like, you know, we kind of heard about this with Bad Boy when, you know, 35 years after you sign a 360, you get a right to get your work back.
Yep.
And that's a federal law. Right. So, like, these are the things also that people are thinking about when they're structuring these deals, versus just saying, hey, we're only looking at your streaming data and that's it. Right. I do want to kind of get into a little bit on kind of the process of how this thing kind of gets done. So if you were an artist and you said, hey, look, I'm really trying to do this thing, right? Like that process looks like, yo, here's an NDA. I'm about to show you everything I got going on, right? And then what you're doing from there is they're sitting down and they're actually looking through all of that paperwork. They're hitting up ASCAP, whose role in this process is to ensure that artists, when their songs are played in certain places, that data is then retrieved, that their song got played somewhere, it's credited, and then that information is logged somewhere. They're almost like there's an audit, and they're one of the folks that people go to actually get information about that. BMI is one of those other folks as well. There's a bunch of other players in that space. Once they retrieve that information, they then determine what type of artist you are and if you fall within these multiples, right? And from there, when they do that, then comes all the like legal and financing work. That's where you're getting the calls from Goldman Sachs. That's when they start getting involved. That's when Apollo starts getting involved if you're a bigger artist. But if you're a smaller artist, that entire portion is basically your STEM, right? STEM is now looking at that and saying, okay, cool, let's run the audit XYZ. And then on the end side, it's you call your lawyer and now you structure your deal, right? That's typically the process of how this gets done, which on one end, like I'm actually surprised that the deal structure, obviously with bigger artists, it's much more complicated, but I'm also surprised about how simple it could be for smaller artists, which is great because when you're thinking about the label model, like if you can actually successfully put out really good music in a 3 to 5 year period, you could be in a position to actually borrow some money or raise some money to then go and create better music, right? Which I think is dope.
Yeah, I mean, I think we've on the music front, that's one of the clearest examples of seeing somebody, do well, think about their catalog. I think this actually has real implications for the institutionalization of creative assets. So I think music typically goes first because it's something that's native, but I actually believe this is a preview for the broader creator environment. If you think about the platform dynamics, many people are, for better or worse, interconnected to algorithms that are not their own, right? Whether that be Instagram, TikTok, YouTube. Please subscribe. If that is true, then the way that value creation is going to happen is going to be very different. And so if in the same way that streaming allows securitization and it can create some level of predictability, then platform analytics serve not just a job for you to go in your YouTube studio. What that means is they actually serve a job to make your audience engagement measurable. And if it's measurable, I can make it valuable. And if I can make it valuable, I can put a financial number on it. And all I need to do is make sure that there's one deal that sets the standard for that. And so now we're in a marketplace. So we're already in a marketplace.
Yeah.
Right? We've talked about the musical marketplace.
We've been talking about the marketplace the whole time.
But we have not talked about every single one of these new environments is a market. And in that market, there are people who want to acquire the attention, which is the currency. How do I acquire attention? I look at a YouTube channel the same way I look at an artist. So your catalog of videos is your catalog of albums. What are your videos worth? Well, since they live in perpetuity, the same way a song does, the way that an advertiser, since YouTube just updated its ability for you to drop in ads and take them out on your own duration, means that I have an ad asset I can use forever. If I have 1,000 of those and you have a channel that has 250,000 subscribers, 500,000 subscribers, 1 million subscribers, you've got a completion rate of north of 30%. The average duration of your video is, 20 to 30 minutes, which means you're looking at like deep engagement for 70% of the video. Most people are watching on TV. These are all metrics I just made up, but I can actually put numbers against that. And now I have created an equation and an environment where, to get a little technical, we've just now started talking about the time value of money. The time value of money, very simple. It means that $1 today is often more valuable than $1 tomorrow. If you're the creator, of $1 today could be the difference between you actually maybe taking that trip and building those partnerships in another country than waiting to do it in a year. If I am an investor, institutional or not, and I look at the kind of attention you have, if I can get 5 or 6 or 10 people that get the kind of attention you get, I can bundle that again and I can take it because you're going to keep getting better. We're in a healthy financial transaction relationship, and I can actually create a multiple. That multiple can then go be scaled to someone who actually needs attention, has money, but doesn't have the time nor the skill to build that. And now I'm in an equity situation where I can sell that catalog of videos from these 10 people, which represent 30 million people. And now the question is, how much is that worth? That's where I think we're going, and we're early, but that's what I'm starting to see. And so music to me is the example of how to start thinking about what you're making as a catalog. And the reason data isn't to have data. You know your numbers, so you know the math of what you want your outcomes to look like. And then you actually start thinking about that.
And you start making decisions on that, right? Because, with the YouTube example you just made, the more videos you make and the better they become, the more valuable your back catalog becomes, right? Because what usually happens is somebody discovers a YouTuber based on a video and they say, yo, let me see what else this guy made. And then they go back and they play those again. And if you're doing those ad inserts, you can increase the value of those ad inserts as soon as those videos start trending properly, right? So like, if you're a creator, this is the way you need to think about your system. If you're an artist, a musician, this is the way you need to think about your system as well. And I don't know, for me, the way I view it, it's like every single thing you make needs to be the hottest thing you ever made. Not only because it's the thing that can give the value to your old stuff, but it's the thing that can actually set your multiple later on top of that, right? And that's a fundamentally different way to think about things versus how a lot of people have been basically trending in both the music industry and in the content space. People have just been thinking all I got to do is put enough stuff out for people to notice me and then we're done, right? And then at some point they're going to notice me and then like they're going to notice me on the thing and forward, right? But to think about the fact that all your old stuff mattered too is a fundamentally different way to think about the business that you're in. There was an era in streaming, especially with music, there was an era where musicians literally were making songs that were shorter just so they could get more streams, right? And then Spotify had to kind of come in and basically like line everybody up, right? But like, you know, if you were in that era of like just trying to make short music just to make short music, right? Like you probably weren't thinking about it from the perspective that we just shared, which is just, yo, like, how can I make the most amount of classics? Because of that, that makes your beat selection different. That makes, you know, the way you're writing stuff different. It's the way you decide who you want your features to be different. You're not really looking to like hop on a trend as much. It's like, how can I make the most beautiful thing that I can make as possible, right? At least that's the way I think about it.
Yeah, I'm looking forward to more innovation. I think it's very, very early. And because we're native, and I think about these like trades. And so if you think about how a trade works, you get good at the skill and then you learn the specialization. And I think that the specialization in this environment is your ability to take people somewhere. And that's the same way music works. You listen to music across the spectrum of emotions. It's attached to memories. In this environment, because there is attention is a currency. And that currency it can be traded on. And there is value being associated with the story that people can tell and the story that people tell about the thing they're consuming. And my interest is what is possible if you are structurally set up the right way to maximize intangible value that people start to recognize as tangible. And if you can do that for long enough, you create compounding impact for what you want. And then the value is simply a byproduct of you doing more of what you do best. So when people come around, it's not a negotiation. It's a conversation about investment because they are interested in something that you do at the highest clip possible. So they want to be involved, which is how leverage works. You lose leverage when you want them to simply notice you. You get leverage when you're the thing being noticed. And for me, what I see a lot of is people are waiting to be noticed when they could just choose to be great.
Real shit.
And when you've chosen to be great, people will take notice because people notice people who take the thing they're doing seriously. It's the way it works. So I think there is an opportunity, because it is early, to think about what you want to be great at and then realize there's a market for that. You might not know where it is, but one of the surest ways to never find it is to not decide and to just actually be in the middle of like whatever. And I think the internet is a very big place. Mm-hmm. It's also a very small forest. It's both at the same time. And because it is so big, there are people interested in so many things that are looking for the thing that have not found it. So it's on some level your responsibility as a creator to make it difficult to not see you, while also making it very difficult for you to violate your own integrity. So it's two types of hard. You could choose the hard of being like, nah, I don't do that. Or you could choose the hard of being like, I do everything. Pick.
That's the end of the episode. Don't follow me. Don't follow John. Don't follow us. Just follow the money.
To be honest, just like broke my heart, especially being an independent artist. Like there's just so much that goes into it behind closed doors. And I think a lot of knowing your worth is earning on your hard work. And I think finding it out just made me feel so weird about this industry. And my story is not the first, and unfortunately it won't be the last. I share this not because I want any drama. I share it because I feel so strongly about artists and their vulnerability and us coming together. So often artists are exploited and they're not protected, and this seriously needs to change. You feel so lucky to get to do this that you don't realise that you're allowed to ask the questions, you're allowed to get the facts, you're allowed to be in the know on everything and truly take your time choosing who you have around you. There's been so many times where I'm just like, I can't do this. But what I will say is music and love always has to win. Artists need to be protected, and I love you guys.